Back with markets at noon, and such an interesting conversation lined up to try and understand everything that's happening on the AI front, the data center space. Let's talk to a company that's in the eye of the storm at this time, and that's Techno Electric. We have the management, Mr. Ankit Saraiya, the CEO and director of Techno Electric, joining us on the show. Mr. Saraiya, hi, good afternoon. Thanks for your time. With the ongoing data center boom, there have been incentives for data centers in the budget, and it has been a major theme in the AI summit too right now, as we hear. Can you shed some light on where the industry is heading overall? What is your role here?
Yeah, if we talk about data centers particularly, you know, we are sitting on currently on a capacity of about 1300 megawatt of data centers, installed capacity as on date. And by 2030, we expect this capacity to reach at least 5 gigawatt, which is three times, and at a Capex of at least 40 crores per megawatt. And if you look at it over the last 10 years, we've, as an industry, faced three disruptions. The first came when cloud started penetrating into India in 2016, after which it was COVID, when digitization picked up pace. Along with COVID, we were moving towards digital payments, which have been a very, very successful implementation in India. And today, as we speak, we are talking about AI and India AI Summit, which has been a very, very successful show of what India can deliver to the world in terms of AI, is a clear indication on where the industry is going to move forward. So the industry has dealt with three disruptions, which has called for planning and replanning again and again. While having said so, the capital expenditures have not slowed down, and we expect at least 4,000 additional megawatt of capacity in minimum coming into India over the next 4 years.
All right. You have also outlined a $1 billion plan for 250 megawatt of data center capacity by 2030. Now, with the first large capacity at Tiruseri, Chennai, and a network of 100 edge DCs over 4 to 5 years, what has changed in the last 6 to 12 months in terms of client conversations or hyperscaler demand that gives you confidence to accelerate this plan? And what kind of revenue, EBITDA contribution data centers realistically make by FY 28-29?
Our plans that we had in the beginning of $1 billion in Capex into data centers still remains as a goal. We are very strongly proceeding with those plans. As you rightly mentioned, we have commissioned our first data center in Chennai, which is of a capacity of 36 megawatt, of which 6 megawatt as of now is commissioned. We have also commissioned our first edge data center in partnership with RailTel Corporation of India Limited in Gurgaon. We are now commissioning our second edge data center in Bombay by end of March. And our Noida data center, with its first capacity of 0.5 megawatt, will also be live by end of March. And by the end of the year, the Noida data center would be expanded to a capacity of 5 megawatt. Our Calcutta data center is under construction as we speak. It's a 16 megawatt data center, and that will be commissioned by end of financial year 28. So our plans are rolling at the pace that we had envisaged in the very beginning. And it has tremendously changed, if you ask me, especially over the last 3 to 4 months. We are seeing significant conversations with hyperscalers, not only for capacity, but also for solving for power requirements for their large data centers. While we are talking to them for capacity, and that capacity today that we are talking to them is largely for their AI applications and AI tools. Those have been the theme of discussions over the last 4 months. But because Techno Digital comes with the pedigree of Techno Electric, which has been in power sector for last 40 years, we are also having discussions with them and solving for power bottlenecks that they're facing for their other installations across the country.
Okay, so that's a status update on some of your plans. But Mr. Saraiya, talking about Mumbai particularly, about the edge data center, what's the current utilization, the contracted IT load, and when are you expecting it to be fully ramped up? Also, what are you seeing on pricing and margins at the edge level versus the planned hyperscale sites? If you could put that comparison for us in perspective.
The Mumbai Edge Data Center, as I mentioned, it will be live and by end of March. By end of February, actually, by end of this month. And to talk about Edge Data Center, the one which we have already commissioned in Gurgaon is fully leased. While we have 70% of the capacity has been leased to co-location players, the remaining 30% capacity have been leased for, we have started our own cloud services out of that 30% of the capacity. And we are already onboarding customers for those cloud services, of which one customer is already live. And we are seeing good monetization, especially out of edge data centers. Today, Gurgaon itself should be able to, which is hardly 250 or 200 kilowatt of capacity, should contribute a revenue of at least 2 crores annually. So edge data centers is seeing significant monetization. We are confident to lease out the Mumbai space also by within 6 months of commissioning. We have great traction for edge data centers. Coming to hyperscale data centers, I would say that's we have very, very active conversations with a couple of hyperscalers for their AI requirement. And we are quite hopeful within the first 6 months of financial year 27, we should have the entire capacity of phase one leased out. And already we are serving at least 5 customers out of our existing capacity in Chennai. And we'll see revenue contributions from Chennai from FY27 onwards.
Mm-hmm. Sure. You have indicated 1,500 crore capex to complete existing smart meter and TBCB commitments and a separate large capex lines for data centers. Could you outline your total capex plan for the next 3 to 4 years and how you intend to fund this?
Let me break this up into 2 separate verticals. One is data centers and the second is TBCB projects and smart meters. FGDs are typically EPC contracts. Therefore, they do not require Capex per se. But for smart meters, we are currently executing 2.24 million meters, of which 50% has already been executed. And we expect a total Capex of approximately 1,500 crores for smart meters. In TBCB, currently we are executing a project in Northeast, in Assam, which calls for an investment of approximately 600 crores. That's again a Capex. And whether it comes to TBCB or smart meters, the idea that we have is to commission the projects and find partners which are willing to invest in these projects, and we will ideally take our exit because we do not want to hold these projects on long term. These are more annuity generating assets, and therefore they are better placed with funds and investors which are looking for annuity income. And therefore, we would ideally like to free our capital by exiting those projects post commissioning. As far as data centers are concerned, we are looking to undertake capex of another 400 crores in FY27. That would be for the ongoing projects under construction, and we may also undertake phase 2 expansion for our Chennai. And overall, we would like to at least invest 5,000 crore of equity in data centers. And we would monetize data centers as well, but we don't have immediate plans. Once we have a decent capacity of 150 megawatt of data centers live, we may at that point of time look for a value exit.
Okay, Mr. Saraiya, that was a great conversation. So good to be having your outlook on what your business model is going ahead, what are the plans, and of course, how you are going to try and capture this AI opportunity. But on that note, viewers, we're completely timed out on this edition of Markets at Noon. From Kavita, me and the team that put this show together, thanks so much for tuning in. Stay tuned because all about your company is up next.